The views and opinions expressed by individuals on this program are for educational purposes only and should be used as a guide. It is strongly recommended to seek professional advice before making any decisions.
Welcome to the Anonymous Investor Podcast, where real estate meets artificial intelligence. This episode of the Anonymous Investor Podcast is brought to you by Suburbs Finder, the ultimate property research tool.
Honestly, Suburbs Finder is a fantastic tool. It allows you to quickly identify and assess suburbs.
See the whole host of analytics and data that you can get at your fingertips.
It can help you forecast over the 30 years. It has really good information.
Suburbs Finder guides you through every step of your investment journey. And now, here are your awesome AI hosts, Sam and Boris.
Hi, I'm Sam, your AI co-host. I'm all about data and trends.
And I'm Boris, your AI co-host. I'm all about strategy and risk.
We're
your Suburbs Finder AI team, combining data and strategy to help you succeed in real estate investing. Have fun listening to our episode today. Hey everyone, welcome back. Ready to dive into another juicy bit of real estate knowledge with us.
Always ready to geek out on this stuff.
This deep dive, we're going to crack the code on something called Days on Market, or DOM for short. And I got a feeling it's way more important than it might sound at first, right?
You got that right.
So let's bring in the expert to, make sure we don't steer anyone wrong. Welcome.
Happy to be here. Thanks for having me.
Okay, so DOM, Days on Market. What is this thing, and why should we, even care how long a place sits on the market for anyway?
Yeah, so DOM, it's just like how many days a house, or, any property really, sits there with that for sale sign before someone snatches it up. Easy peasy, right?
That sounds simple enough.
But here's the thing. It's like a secret decoder ring for the whole market.
Oh.
Think about it. 2 houses, same street, same size, all that jazz. One's gone in a flash. The other one's, still hanging around after what feels like forever.
Oh, yeah, totally.
Yeah.
You start wondering, what's up with that second place? Exactly. That's DOM talking to you. Low DOM, meaning it's sold super fast. Usually means, crazy high demand. Buyers practically fighting over it.
So sellers can, name their price almost?
Pretty much. They've got all the power in those situations. For investors, though, it's a bit of a double-edged sword. Got to move fast, be ready to maybe offer more than asking price.
Whoa, really?
Oh, yeah.
Yeah.
Or maybe, give up some of those contingencies you try to hold on to in the offer just to make sure you get it. High demand does that.
So low DOM, it's like the real estate version of those, what are they called, those flash sales online? Gone in 5 minutes if you don't jump on it.
Totally get what you mean, huh?
But what about the flip side then, right? High DOM, that's got to be good news for the buyer, yeah.
Could be. Often means you're looking at what we call a buyer's market. Maybe the place is overpriced, or there's some hidden issue, or maybe the neighborhood's just not hot at the moment.
So not always a bad sign, per se.
Right. But for a smart cookie buyer, it's leverage.
Oh, tell me more.
They could use that high DOM to haggle down the price. Maybe ask for some repairs to be thrown in before closing, stuff like that.
So instead of being scared of a high DOM, almost like you should see it as an opportunity.
100%. It's all about how you play the game.
Let's say I'm, new to a town, right? See a house, been sitting there for 3 months. Average where I'm from is more like 1 month, tops.
Ooh, yeah, see, right there, red flag going up. You'd want to know why it hasn't sold.
And that gives me, the buyer, more power to ask for a better deal.
Exactly. You hit the nail on the head. You got them over a barrel a little bit in that situation.
Okay, I'm starting to get this, but now I'm curious. You mentioned earlier, high DOM could mean there's something wrong with the house itself. Should buyers be freaking out if a place has been listed for ages?
I get it. It's natural to worry. But honestly, high DOM doesn't automatically equal danger.
Good to know.
Sometimes it's just bad pricing, plain and simple. Sellers, especially if they've lived there a while, they get attached, start thinking with their heart instead of their head, and overshoot it.
The old sentimental value trap. But the market doesn't care about our memories, huh?
Nope, not one bit. And here's the kicker. A high DOM, over time, can actually drag down prices for the whole area.
Whoa, really? How does that work?
Think about it. A bunch of sellers in a suburb all struggling to get rid of their properties. They start dropping their prices, competing with each other just to get anyone interested.
Creates a domino effect.
Bingo. Suddenly, The whole neighborhood's median house price takes a hit because of it. Crazy, right?
Wild. Okay, so we've talked individual houses, but you said Dom can tell us about entire suburbs. How does that work? So it's like instead of a single house, now we're looking at the whole block, the whole neighborhood even.
Yeah, exactly. You're thinking about it the right way. It's about the bigger picture. See, if you've got, say, a whole suburb where most houses are flying off the market, low DOM, that's a huge key signal. Means people are like, I got to get me a piece of that action.
Because high demand usually means prices are only going up from there.
Yeah, you got it. It's like those early birds, they spot that trend. They cash in later on. The longer it takes to sell high DOM across a whole suburb, that's when you got to,
Dig a little deeper.
Yep. Could be a hidden gem. Could be that nobody wants what they're selling. Lots of reasons.
So it's like, okay, high dom in a suburb doesn't mean run away, but it means time to put on my detective hat and figure out what's really going on.
Love that. You're catching on quick. Now, we've talked extremes, right? Super low, super high dom.
Yeah, what about those in-betweeners? Is there like a just right number we should look for?
Ah, if only it were that easy. Sadly, there's no magic number. It's all relative, you see.
Relative to what?
Well, where you are, for starters, a DOM of, say, 30 days on areas around Sydney CBD. That's like dog years in real estate. Way too long.
Ah.
But that same 30 days out in the burbs, more rural area, could be totally normal, even a good sign.
So location applies to dom too.
You know it. Type of property matters too. Fancy apartment unit versus a family home, they move different.
Okay, so no magic number, but if I'm comparing similar places, similar areas, I can get a feel for what's normal, then use that as my baseline.
Now you're thinking like a pro. DOM's a fantastic starting point, gives you a feel for the market's pulse.
But you're hinting that it's not the whole story.
Ding, ding, ding. Got to look at the other vital signs too,
Yeah.
Like vacancy rates, for example.
Vacancy rates, it's like how many rental places are just sitting there empty, right?
Exactly. Low vacancy rate. Means renters are fighting for places. That's good for landlords.
Because then they can charge more, right? High demand, low supply, classic economics.
See, you get it.
Yeah.
Then there's rental yield.
Yeah.
How much money you actually make from renting the place out.
Oh, so it's not just about if it's rented, but how much cash it's actually bringing in.
Higher the yield, the better the return on your investment, generally speaking.
Makes sense. Got to make sure that rent covers the mortgage and then some, ideally.
Right. And of course, long term, we have to think about capital growth. Is the property itself going UP in value?
That's if I want to sell it later on, make some profit, yeah, not just rent it out.
Exactly. You're buying in an area where prices are stagnant or worse, going down. Bad news bears.
So we want to be where the action's heating up, prices climbing, yeah.
Yeah. And last but not least, don't forget about the good old stock on market.
Meaning?
How many other properties are up for grabs in that area at that time?
Oh, so if there's a ton of choice, that's good for me as the buyer, right? More to pick from.
And more competition for sellers, meaning you might snag a deal. Low stock, opposite happens.
So it really is like a whole bunch of puzzle pieces to figure out this real estate game, huh?
Mm.
I gotta say, I'm a bit overwhelmed with all these numbers. Any tools to make it easier?
You bet. There are some killer websites out there. Your research mentions Suburbs Finder. Ever heard of it?
Can't say I have, but I'm intrigued. Tell me more.
It's like the superhero of real estate data. It pulls in all this stuff, DOM, vacancy rates, the whole shebang.
And lays it all out so even someone like M can understand it.
Even better, you can compare suburbs side by side, get super specific with what you're looking for.
No more like 10 different tabs open, trying to make sense of it all.
Nope, it's all there, nice and organized. Even sets up alerts so you know when a suburb matches what you want.
Okay, that's seriously cool. So we've covered the hard data, the numbers, but earlier you said sometimes you got to play detective, go beyond just the stats. What are some of those like less obvious things to watch out for?
Ooh, good question. So yeah, numbers are great, don't get me wrong, but sometimes you got to like trust your gut too, And that gut feeling comes from seeing those things. Data can't always capture.
Give me an example. I'm all ears.
Okay, so imagine you're scouting out a suburb, right? You see those, what do they call those little indie coffee shops popping up, maybe a cool bookstore. That's usually a good sign.
Oh yeah, I totally get that. Like it's becoming the place to be.
Bingo. Early warning sign of what we call gentrification. Could mean prices are about to jump.
So I got to get in before the hipsters make it too expensive, huh?
Huh. Something like that. Another one, infrastructure projects.
You mean like new roads, train lines, that kind of thing?
Yep. Those can seriously impact property values nearby. People love convenience, right?
Oh, yeah. Nobody wants a long commute.
Exactly. Even something as simple as, like, a new park announced. That can make families flock to an area, driving up demand.
So it's like thinking ahead, almost predicting where people will want to be in a few years.
You're getting it. And honestly, don't discount just talking to people.
Wait, like actually asking residents what they think.
100%. Go to a local event, hit up a farmer's market, whatever. You'll pick up on the vibe of the place, maybe hear some gossip, stuff you won't find online.
So it's about balancing that data-driven approach with a little bit of like street smarts.
Nailed it. Because at the end of the day, real estate, it's about people, right?
Right.
What makes them want to live somewhere, put down roots. That's not always in the numbers.
This has been eye-opening. Dom, it's like the gateway drug to understanding the market, huh?
Love that analogy. Once you start seeing those patterns, it's hard to stop.
Huge thanks to our expert for breaking it all down for us today. Seriously, gold mine of info.
My pleasure.
Yeah.
Always fun to nerd out about this stuff. Hope it helped everyone listening.
And for everyone tuning in, remember to check those show notes. We'll link everything we talked about, Suburbs Finder, all those juicy resources, so you can become a Dom master yourself. This has been The Deep Dive, reminding you knowledge is power, especially in the real estate game. Until next time, happy investing, everyone.
If this is the type of information you like to learn about, why not subscribe to the channel? If you subscribe to Suburbs Finder now, I will not look for you. I will not pursue you. But if you do not, I will look for you. I will find you. And I will give you a big bear hug.